Hello everyone, in today's session we will be discussing chapter 4, that is process and basis of accounting. Now in this chapter there are two main topics that we will discuss today. That is, first is the process of accounting, means what we will be doing practically in this subject, and next is basis of accounting. There are actually three bases of accounting. The most important are cash basis and accrual basis, and third one is hybrid or mixed basis of accounting. So at first let us see what is the process of accounting. Now in definition of accounting, we saw that we have to first identify the transaction, then we have to record it, and then we have to classify and interpret the result of our business to the interested parties. Now what is that process? Now there are 5 steps in process of accounting. First one is identification of transactions. Second, preparation of vouchers. Third, recording in books of original entry, or you can say journal entry. Fourth, posting to ledger, and at last we will be preparing trial balance or financial statements, that is our balance sheet and profit and loss account. Now let's discuss these 5 steps in detail. Now first one is identification of transactions. Accounting deals with business transactions which are monetary in nature. In other words, the transactions which cannot be measured and expressed in terms of money cannot be recorded in accounting. As we all know that all those transactions which can be expressed or which can be translated into monetary terms are going to be recorded in our books of accounts. So in first step, what we have to do is we have to identify those transactions which can be expressed in monetary terms. In other words, the transactions which cannot be measured and expressed in terms of money cannot be recorded in accounting. For recording business transactions, it is necessary that these transactions are evidenced by an appropriate document such as cash memo, purchase invoice, sales invoice, pay-in slip, checkbook, passbook, etc. A document which provides evidence of the transaction is called the source document. Now only those transactions which can be expressed in monetary terms are recorded in our books. But there is one more important thing, that is, for every transaction there should be a document as a proof. Without this proof we cannot record the transaction. Now these documents can be cash memo, purchase invoice, sales invoice, pay-in slip, checkbook, passbook, or any other paper valid document which can show the authenticity of business transaction. Okay, and those documents are nothing but source. They are known as source document because they are the source of transaction. Okay, then next step is preparation of vouchers. On the basis of source documents, entries are first of all recorded on vouchers, and then on the basis of vouchers, recording is made in the journal or books of original entry. Now after we have the source document, what we will do is we will prepare vouchers. We will record that information of particular transaction in vouchers, and from those vouchers we will be entering those transaction in journals or books of original entry. Now vouchers are nothing but they are printed separately by all the firms. In that voucher, or you can say that document, the name of the firm will be there, address, and every information related with the business will be mentioned in that vouchers. And in that voucher we have to write the transaction, and after noting down the transaction, what we have to do is we have to get signature of the owner or anybody else in the business who has authority to sign in voucher. Now these vouchers are usually arranged in chronological order, means according to the date or time of the transaction, means whatever transaction took place first will be recorded first. Okay, and they are serially numbered. Each of the voucher will have serial number, and they are kept in a separate file for future reference. The next is recording in books of original entry. Now after preparing vouchers, what we have to do is we have to enter the transaction, or we have to record in journal. Okay, books of original entry, that is journal. Now, journal is nothing but one of the books of original entry in which transactions are recorded in chronological or day-to-day order according to the principles of double entry system. Now, principles of double entry system is nothing but for every transaction there will be minimum 2 account involved. If one is increasing, then another will be decreasing, or if one is debited, then another is credited. Now, the rule of debit and credit we will learn in our subsequent sessions or in next session, but first you have to understand that journal entries are based on the principle of double entry system. Now, when the size of this business is a small one, it may be possible to record all transactions in the journal, okay, because we will have limited number of transactions and we don't need a big book for recording all the transactions. But if the size of business grows or the number of transactions are very much, then it is quite difficult to prepare journal. So in that case, what the firm do is that instead of preparing journal, what they do is they divide the transactions into different parts, or we can say sub journals, okay, into a number of books. Means not only recording in one, small business can record in one book, that is journal, but big firms, those who have huge transactions, what they will do is they will divide that journal into different books. They will be known as sub journals or special journals. Okay, now let us see some example of sub journals. For example, all transactions related to receipts and payment of cash, means all those transactions for which we had paid any cash or we had received any cash will be recorded in cash book. Means only cash transactions are recorded in cash book. Then all the transactions related to credit purchase are recorded in purchase book. There will be one separate book for purchase in which we will record all the credit purchases. Credit means not cash purchase, only credit purchase will be recorded in cash book. In the similar manner, all the credit sales will be recorded in sales book, and so on. So all these things we will learn how to prepare purchase book, cash book, sale book, and all. Okay, so these special journals are also called as subsidiary books, okay, of this, as this facilitate the preparation of ledger. Now, after preparing those special journals, what we will do is we will prepare ledger. Then fourth step is posting to ledger. The next step in accounting process is to transfer all entries recorded in journal or subsidiary books to respective accounts in ledger. Means after posting in journal or subsidiary books, we will take all the transactions and we will post it in ledger. Ledger means all the similar transactions related with one account will be recorded separately. Okay, now ledger is the principal book of accounts in which all the transactions ultimately find their place under their respective accounts in a duly classified form. Means in ledger only we will separate each and every transaction. Suppose all the cash sales or cash purchases or any cash related transactions will be recorded under cash account in ledger. In similar manner, all the purchases will be recorded under purchases account in ledger. So for recording in ledger, all transactions are classified and transactions of similar nature are recorded at one place in an account open in their name, which will provide a complete picture of all the transactions related to them at a glance. Means suppose if you want to check whether a particular transactions had taken place regarding purchases, then what you have to do is that you have to open ledger book. Then in there you will search the purchase account, and in that account you will find all the transactions related with purchases. So ledger gives you facility of locating the transaction easily if you know the name of the account. Okay, thus in ledger separate accounts are open in the name of each person. Means if you're running a business, there will be lots of suppliers, lots of customers as well. So for each and every person you will create different account whether customer or supplier. Likewise, separate accounts are opened for each and every asset, liability, purchases, sales. And for every account there will be one separate ledger. Okay, then for all incomes and expenses also you will prepare one separate account. Suppose if you have paid salary, then that will be recorded under salary account. If you have paid rent, then you have to record under rent account. Then if there is any discount, then that will be recorded under discount account. Then the last step is preparation of trial balance and financial statements. Now this is the last step of accounting. In this step what we do is that we prepare trial balance and financial statements. Now a trial balance is a statement prepared with the with the debit and credit balances of ledger accounts. Means after preparing ledger you will close down each and every account, and from that we will find whether the account is showing debit balance or credit balance. If an account is showing debit balance, then we will record it in the debit side of trial balance, and if any account is showing credit balance, then we will record it in the credit side of trial balance. Now after recording all the transactions, we have to find out total of both the sides, that is credit and debit side. Now to verify or to check whether you have prepared everything correctly, there is one facility available in trial balance. Now see, after finding a total of both debit and credit side, if both the sides are same, that means your calculation or your preparation is correct. But if both the side, debit and credit side, are not same, that means there is some error or some mistake you have done. Okay, then if you have found out that there is some error, then what you have to do is to locate that error and you have to rectify. As the trial balance contains the balances of all ledger accounts, it provides a basis for preparation of financial statements, namely trading and PL account and a balance sheet. Now in trial balance you will record all the totals or debit or credit totals of each and every accounts, and from that trial balance you will take all the accounts, and what you have to do is you have to prepare profit and loss account and then balance sheet. That we will learn in other chapters. Now let's talk about basis of accounting. Now there are mainly two types of basis. The first is cash basis, second is accrual basis. Now first look into the first one, that is cash basis of accounting. Now under this basis, incomes are not recorded unless they are received in cash. Similarly, expenses are recorded only when they are paid in cash. Means until and unless you haven't made the payment or you haven't received the payment and received the cash, you will not record it in your books. This is meant by cash basis of accounting. If you have received cash, then you will record it, but if you haven't received the cash yet, that means that transaction will not be recorded in your books. Or you can say that credit transactions are not recorded at all and are ignored till cash is actually received or paid for them. Suppose in this year you have made one credit sale and your customer had paid you the amount in next year. That means this even though the transaction took place this year, you cannot record it in your book in this year. Means the date on which you have received the payment, that is next year, only that time you have to record it in your books, otherwise not. So profit is merely the excess of actual cash receipts in respect of sale of goods and other incomes over actual payments in respect of purchase of goods. Now in this kind of accounting, what you have to do is, what you will get, profit amount is nothing but excess of receipt over your payment. Income or profit is calculated with the help of a receipt and payments account. Now receipt and payments account is there, you will prepare that, and after closing that account only you will be able to see whether you have income or loss. This basis is useful for professional people. Now this basis of accounting is good or suitable for lawyers, doctors, chartered accountants, etc., those who provide services it is beneficial for them to use this kind of accounting. Now let us see what are the advantages of this system. Now this is simple, realistic, and satisfy the conservative instinct of many people. Means this cash basis is very simple. Means you received money, you will enter it. You haven't received the money, you will not enter it. It's just like that. Means you don't have to think like whether I will get the money or not. Okay. Then next is, it does not require the use of estimates and personal judgments. Personal judgments, you cannot put your personal judgments in this. Means you have to be very objective in nature. Means you received money, yes, okay, if not, then no need. Then it is suitable for those enterprises where most of the transactions are on cash basis. Means even though this basis is suitable for professional, but still some business enterprises, they also can use this basis if they deal in cash transaction and not in credit. Then there are some disadvantages as well. It does not give a true and fair view of profit or loss and financial position of the enterprise, because it is ignoring all those transactions for which cash has been not received or payment has not made. Just like outstanding expenses, means you were supposed to pay but you haven't paid yet. Prepaid expenses means you paid the expenses in advance. Then accrued incomes, you are liable to receive the income but you haven't received yet. And incomes received in advance means those incomes which you have received in advance. So all these things they ignore in cash basis of accounting, and that is why your profit and loss account or balance sheet will not show true or fair condition of your business. Now it does not follow matching principle of accounting. Yesterday in our previous session we saw that matching principle is same as accrual basis of accounting, but this cash basis is opposite of accrual, and that is why it is not same as matching principle. For example, acquisition of goods will have to be treated as expenses of the period in which payment is made instead of the periods in which benefits are derived from them. Means if you have purchased any asset in this year but you haven't made the payment yet, then you cannot enter it in your books in this year, because you have to show that transaction on the date or the year on which you have actually made the payment. Okay. Then there is great possibility of manipulation of profits, as we don't record cash payment or we don't record the credit transactions. That means you're manipulating our profits. Okay. Then Companies Act 2013 does not recognize this cash basis of accounting. Now next is accrual basis of accounting. Now under this basis it is opposite of cash basis. In this accounting, accrual basis of accounting, whether you have received or made the payment or not, as soon as the transaction takes place you will record it in your books. Okay. Under this basis, incomes are recorded when they are earned or accrued, irrespective of the fact whether cash is received or not. Examples: sales are made on credit will be included in the total sales of the period. Means you will not wait for the payment, because in this accounting system you have to record it in your books for the period in which it took place. Similarly, expenses are recorded when they are incurred or become due, and not when the cash is paid for them. Example: rent due to the landlord but not paid will be treated as expense for the period when it is due. You will not wait. Means if the amount had become due, that means you have to write outstanding rent. Then there are some advantages of accrual basis of accounting. Let us see. It discloses true profit or loss for a particular period and also depicts true financial position of the basis at the end of a particular period, because it takes into account all transactions relating to a particular period and takes into account all adjustment like outstanding expenses, prepaid expenses, accrued income, and income received in advance. Since this basis of accounting treats all the transactions related to a particular period in the same manner as that of cash transaction, it gives us a true view of our business. It gives true nature of the business, that is whether we are earning profit or loss. Okay, then it sure does matches, it follows matching principle of accounting. Then there is consistency in computation of profits of different years in accrual basis, because it makes a distinction between capital and revenue expenditure. Now because of this accrual basis of accounting, we are able to categorize our capital and revenue expenditure, and because of that, for each and every year we can compare our profits or losses. Then the last one is, it is recognized by Companies Act 2013. Then we have only two disadvantages of this accrual basis of accounting, that it is not as simple as cash basis of accounting. It is very difficult, that you will understand while preparing financial statements. Then it requires the use of estimates and personal judgment. Since we don't have basis of cash receipt or cash payment, we have to put our personal judgment as well for making financial statement under accrual basis of accounting. Now let us see what are the distinction between these two type of accounting. First, relate on the basis of recording of cash and credit transaction. We know that cash basis they record only cash transaction, and accrual basis they record only they record cash as well as credit transactions. Then timing of recording of incomes. Incomes means, in cash basis, as soon as we receive the cash, we will make entry in our books, but in accrual basis, all the incomes are recorded whether cash is received for them or not. Then for expenses, as soon as you make the payment, you will record under your cash basis of accounting, but in accrual basis of accounting, expenses will be recorded whether cash is paid or not. Then outstanding expenses, prepaid, accrued, incomes received in advance, we ignore all of those things in cash basis, but we take into consideration under accrual basis of accounting. Then legal position. Companies Act does not recognize cash basis of accounting, but they do recognize accrual basis of accounting. Then for ascertainment of correct profit or loss, cash basis is not that much helpful in finding out the exact amount of profit or loss, because they ignore all the credit transaction. But in accrual system, it gives us somehow an accurate amount of profit or loss, because they record all credit as well as cash transactions. Then suitability. This cash basis is suitable for professional peoples like lawyer, doctor, chartered accountants, and all. But this accrual basis of system, it is suitable for business enterprises. Okay. Now the third type of basis of accounting is nothing but mixture of cash and accrual, that is hybrid or mixed basis of accounting. Now this basis of accounting is a mixture of cash basis and accrual basis. Under this hybrid basis of accounting, revenues and assets are recorded on cash basis, means all the day-to-day transactions and assets, they will be recorded under cash basis, but expenses and liabilities, they are recorded on accrual basis. Okay, now this point you have to remember, hybrid is nothing but mix of cash basis and accrual, and revenue and assets are recorded on cash basis, while expenses and liabilities are recorded on accrual basis. Usually professional people such as doctors, lawyers, etc. adopt this method and prepare receipts and expenditure account to ascertain their net income during a period. They ignore their outstanding income but take into consideration outstanding expenses. The idea is to claim deduction for outstanding expenses while computing taxable income. Means when professional they calculate their net profit or loss for whole year, they want to show less income and more expenditure. That is why they ignore outstanding income, but they take into consideration outstanding expenses, because when they show more expenses, their income will be less and less amount of tax they have to pay. Hybrid system of accounting is an acceptable and approved system as per judgment of the courts. Now this is a very cunning way of reducing your income to show less income, but hybrid system is approved by the court, so most of the professional they use this hybrid system. Okay, now this was our final theory chapter of accounting. From our next session we will be starting calculation, that is accounting equation. I hope all of you have read or you have gone through the theory basis of accounting, because these things will be very much of helpful while doing accounting equation or any other practical question. So if you haven't seen or you haven't read those theory parts, I'll recommend you do that before we start accounting equation. So thank you.